Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right. So today I want to talk a little bit about some behind the scenes stuff that is going on that, you know what, you kind of need to know about. One of the things that I highly encourage you to do is when when you're really trying to find out what's going on in the world, I encourage you to look for sources outside of mainstream media, meaning, all of the news channels and all that stuff. That's great for some kind of highlight stuff, but really to know what's going on, you really need to get out of the mainstream media and into some more specific type publications, channels, blogs, websites, that kind of thing, so that you can really understand what's going on in the world and how the rules are being applied. And so I wanted to share with you this study that I was reading that talks about how the reduction in IRS funding is how that's impacting us as a whole, and mainly in the audit process, right? So, throughout the last few years, the IRS budget has been decreased and everybody's like, whoo, yay, okay. But you know what? But it also means some increased automation. So it spells good news for some people, not so good news for others. And mainly the ones that it doesn't spell good news for is the working poor. And these are people that receive the earned income tax credit. Now, the majority of people that receive the earned income tax credit generally make about, $40,000 a year ish or less. Okay. That's where we're, see the earned income tax credit. And the earned income tax credit was designed to help ease poverty, right? It was originally designed to help help keep people out of poverty, help put food on your table, right? So that's where the earned income tax credit came from. It started out being a temporary thing, and then it was made permanent. And so with the earned income tax credit, family can receive, a refundable tax credit, of up to, $6,000-ish, depending on your family dynamic and all that. It's not say every family gets that, but that's what it is. But there's more of a push to audit earned income tax credit receivers versus wealthier people. And one of those things is that, with wealthier people, it takes more human intervention to audit than it does for earned income tax credit filers. And this is why. With earned income tax credit filers, there's more automation involved, right? You got your W-2. Did you file your W-2? Did you not? Okay. It's easier to verify your income. And it's also easier to cross-check databases. And so this is why I really, caution people who have more than 3 children, because with the earned income tax credit, you have up to 3 children. You don't get any more benefit after, 3 children. And so sometimes people that have more than 3 children, they rent those Social Security numbers out to their friends and neighbors for a fee, so their friends and neighbors can claim those kids and also get earned income tax credit or get reduced tax liability, whatever. But what's happening is that there's more cross-checking of databases, okay? And so they're cross-checking with who's filing what, with Social Security numbers. Because see, I tell y'all, if the IRS sees that Junior is claimed by, Jane this year, Jack next year, Susie the year after that, and all of that, they go, okay, hold on, let's go start cross-matching some databases with Medicaid and all of that, because people with lower income use more public services, right? So we're talking about Medicaid, we're talking about Social Security. So they start cross-checking those databases and going, oh, well, let's see, where does little Jimmy really live? Okay. And so then when you get caught with earned income tax credit fraud, then you're going to be in a lot of trouble, right? Because you have to then pay that money back. And 9 times out of 10, the people that claim fraudulent earned income tax credit don't have the money to pay it back and don't have money for representation. So then you're at the mercy of the IRS. Okay. So, so I caution people all the time about this whole claiming kids that ain't yours. Listen, cease and desist on that, because when you get busted, you're not going to be able to pay that price. Okay. Because when you have to pay that money back plus interest and penalties, and if you didn't get that credit, if you owed, holy cow, you got a whole mess of stuff going on. And so that, again, you're not able to afford the representation piece. And so then you get yourself in a whole complete other ball of wax. But at the end of the day, you can be disallowed or banned from claiming the earned income tax credit ever again. Okay. It don't matter how many kids you have, how much money you don't make. So right now, the IRS's focus is on catching people with the earned income tax credit. And so as tax professionals, I do have tax pros that watch my show. As tax professionals, we have to be more diligent for our clients who are claiming the earned income tax credit to make sure that they have the proper documentation to claim the children that they are claiming, so that you as a tax professional don't get fined for not doing your own due diligence. Now, if folks just, flat out lie to us, we ask all the questions and you give all the right answers and documentation, if you do your job as a tax professional and that taxpayer is lying, you ain't got nothing to worry about. But it's if you don't go through the steps to make sure, as much as possible that you're getting, true and correct information. And so and again, I remind you, when you sign your tax return, you're basically saying, under penalty of perjury, because that's what it says, under penalty of perjury, that everything on your tax return is true and correct. Well, perjury is a felony. Okay. So think about that. So, and so now there's this big push to audit more of these returns, because the earned income tax credit is the largest paying credit that we have in our tax system for our working poor. It is what it is, right? And so, on the flip side, though, when it comes down to drops in audits, the audits for wealthier Americans has dropped faster than it has for everybody else. And why? Again, because it requires more human intervention. So if you reduce the funding to the IRS, if you drain them of their resources, then they can't do their jobs, right? They can only do so much with so many people and so much time. And so, people are like, okay, well, why don't we just do away with the IRS altogether? Can I tell you that the IRS is not going anywhere? Even though their resources may be limited, even though, their staff may be reduced, the IRS is not going anywhere. The IRS was created by Congress to collect tax revenues initially in this country to fund war. Like, people always ask, why is there always money to fund war? Well, that's why the tax system in the United States was created to begin with, to fund war. Okay. That is why there will always be money to fund war. So my message to you is this. You need to have your returns prepared as if you were going to be audited tomorrow, right? Because even though there is a reduction in the amount of people that are actually auditing, I forgot what the number was. It was something crazy at the number of auditors. I can't find it right now. Oh, it says this. The IRS conducted 675,000 fewer audits in 2017 than it did 7 years earlier. And the IRS has drastically stopped pursuing non-filers. That fell from 2.4 million in 2011 to 362,000 in 2017. And then it says that the tax cuts have gutted the IRS's ability to go after rich tax evaders, and under continued pressure has made auditing working poor who receive the earned income tax credit a higher priority. So yeah, guys, this is what's happening. Like, don't think that just because, the IRS reduced funding that they can't do their jobs. There's just more automation involved. And for my home business owners, this is something else that I want you to be aware of as well, because there are actually a lot of small business owners, not just, home business owners, but, small mom and pop shops that also receive the earned income tax credit. Okay. And so, so when you're talking about, when you have that perfect storm of you're showing a business that's losing money, but you're also, getting, the earned income tax credit and all that, that also raises, questions at the IRS, because like I told you, you got like that 3 years. And then after that, if you're not showing some money, they're going to be coming for you. So you think about that. So if they come back and disallow your expenses, they tell you that, hey, you got an expensive hobby, not a business. And then they also, disallow your tax credits. You got to pay that money back. Like, you really have to think about this in a big picture thing. Like, even though I am the home biz tax lady, taxes is an all encompassing thing. It is a big picture thing. So one part of your taxes affects everything else. It impacts all different, areas of your life, right? And especially if you have kids that are in college, if your taxes aren't filed properly and all of that stuff, hey, FAFSA should be really in charge of tax collection, because they know if your stuff is jacked up way before the IRS does. Okay, so FAFSA is a beast. The financial aid. Okay, so my main message is this. Number one, if you really want to know what's going on, like behind the scenes that is affecting policy and stuff, you got to get off TV, because that's not going to be there. Because you hear people say, oh, well, soy and soy is just a distraction. Well, the truth is that a lot of times that it is. This is not a conspiracy theory thing, because the stuff that hits the news is what's going to be very sensational type stuff. The stuff that doesn't hit the news is more impactful and is kept quiet. So this is why you have to get out of mainstream media to know what's really going on, because this didn't hit the news that the IRS is more focused towards earned income tax credit filers. It didn't hit the news that the IRS is also looking for small business owners that may not have paid employment taxes. That kind of stuff doesn't hit the news. It only hits the news for people who are watching for it. And so if you're not watching for it, you don't know. And so that you can prepare yourself. So if you've been doing something funky with your taxes, I'm telling you now, get your stuff together. Okay, file your stuff the right way. Because even though the possibility of you getting caught may be reduced, it's not exterminated, it's not eliminated. It's kind of like winning the lottery, right? Except in the wrong way. Like, it's winning the lottery is all well and good, but in this case, if you get elected for that audit, it's not sexy at all, right? So for my tax professionals who have clients that claim the earned income tax credit, make sure you do your homework. Make sure you do your homework, ask for all the documentation or whatever. And for my taxpayers, hey, if your tax professional is asking you all of these questions and asking for all of this documentation, it's because their reputation, their licensure is on the line too. If they get caught not doing their homework during their due diligence, hey, we can get a fine too. And if we continue to screw stuff up, yeah, we can get in some hot water. I ain't trying to mess up my little enrolled agent for y'all. Y'all see me Facebook memories right now. It has got today of the recording of this video is my 2-year anniversary of passing part 2 of the enrolled agent exam. And Facebook memories has got my video up with me crying all crazy because yeah, I worked hard for that. So I'm not trying to screw that up for anybody. Okay, for real. But if you prepare your returns like you're going to be audited tomorrow, you're going to be fine. It's when you start doing shady stuff that you get yourself in trouble, and you might not get caught this year. You might not get caught next year. But when you do get caught, the other thing that you need to know, there's no statute of limitations on fraud. So if they catch you this year and if something says, okay, we need to go look back at previous returns, they can go back until the fraud stops, and you're going to have to write that check. Okay? That's how that works. All right, you guys. So I hope this gives you some food for thought. Thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right, have a great day. I'll see y'all next time. Bye.